Hello, everyone. Welcome back to the channel. I wanted to make this video today because I wanted to answer a question that I'm getting asked a lot of. And that question is, should I refinance? Now, we know last week the Fed met and they lowered the interest rates like half a percentage point. And eventually, that's a pattern that they may continue to do throughout the rest of the course of this year. Again, they're trying to do what they can to stimulate the economy. And that always starts a frenzy of banks and mortgage companies, lenders, things like that, wanting to do what they do best. Remember, a bank has to lend money in order for them to stay in business. If a bank is not lending money, they will not stay in business. So, what's going to happen now that the rates have dropped? Well, if you recently bought your home in the last couple of years, I'm talking about possibly 2022, 23, maybe early 2024, you definitely paid the price. If I'm not mistaken, I think it was as high as 7.08. The rate had gone up once upon a time back in October of 2022. They hovered around there a little bit. And I remember when I was at the bank, I was always keeping an eye on the rates because I knew that sooner or later, this point today, the point where we find ourselves in right now, was going to happen. The rates have dropped. People are interested or they're inquiring as to whether or not they should refinance. Well, I want to answer that question. And the way to best answer that question is, have you ever thought about what is the true cost that is involved when you refinance? There is definitely a cost to the borrower when they refinance. And I'm not just talking about closing costs. I'm not just talking about origination fees. The cost that I'm talking about is cost number one is the cost of the interest. You see, every loan that you get at a bank, it's front loaded. What does that mean? Well, that means that you have a payment every single month. That payment has two components to it. There's a component that's principal and there's a component that is interest. So when you first bought your home, the majority of your payment is going toward the interest, which means what? It means it's front loaded. It means that the bank is getting paid first. So it doesn't matter. You can make two or three payments at one time. The very next month, your payment will be the same. The only thing that's going to change is the amount of interest that you're going to be paying up front. That is a front loaded loan. It's a closed loan. Once you send your money to that mortgage or to that loan, it is gone. You will never see it again. So that is the true cost of the loan, because what's happening now is people are asking that question. And if you were to refinance right now and only look at that option and not do your homework and not do your research and not look at potentially other ways that you could indeed lower your payment over time, that's probably the option that you're being offered right now by your bank. I remember when I worked at the banks, I had a list. That list was a list of ongoing customers that I had worked with in the past, usually maybe 2 or 3 years, or maybe it was a time in the mortgage in the market where interest rates were high, but I knew that in a few years they will drop, the market would readjust, and I'll have a client that I could reach out and call and say, hey, it's time for you to come back in. Let's refinance. Let's drop your rate. And I had repeat business that way. That is the time that we find ourselves right now. The problem with that, again, it's a front loaded loan, and the interest, you paying the interest up front against that cycle repeats all over again. And if you get into another 30-year loan, possibly with just a little bit of a lower rate, that cycle impacts is even greater. The second cost that it's going to have to you is that the cost of time. When when you do a mortgage refinance and that clock starts over all over again, because it's front loaded, it's impacting the amount of the money that you give in the form of a payment. So let me give you an example. Say, for example, you did buy that home in 2021, right? Here we are 3 years later in 2024. Now you're getting the mail, you're getting the phone calls, you're getting the emails, whatever the case might be. They're reaching out to you and they're saying, hey, we could refinance that loan for you, drop your rate to 6.5%, and you're going to save $130. That may be the case, and it's true. On paper, you will be saving the $130 indeed. However, what's going to happen is the time that you spent over the last 3 years paying the bulk of your payments toward that principal is going to go away. And because you refinance and you started that 30-year mortgage once again, that now is going to recycle itself. It's a front loaded loan, and the time that you go and start paying toward the principal starts all over again. So the bigger chunk of your payment is going to go toward the principal, delaying the speed in which you actually pay that loan off. And it's kind of like a never ending trap. And it happens again as the market continues to drop rates, like they're saying that that's going to happen. It happens every single market. They encourage you to do it, but I just want to let you know it's not the best way to drop your payments. It's not the best way to more quickly and efficiently pay off your mortgage. There is indeed a better way. What I'm going to do is in an upcoming video, I'm actually going to break this scenario or this situation down for you. I'm going to show you by the graph. I'm going to show you on real life numbers based off the rates of what they were just a few years ago and where the interest rates are now, and how potentially that would impact someone that potentially you're seeing this video and you bought a home recently, how that structure would actually impact you. So I want you to stay tuned for that. Because again, I want to be able to educate you. You're here, you're watching this channel. I thank you for taking the time to do so. So I want to make sure you're really getting value of the information I'm sharing with you, and at the same time, learn of a better way that's more quicker and more efficient for you to pay off your debt, including your mortgage debt. So again, stay tuned for that videos. It's going to be coming very soon. And continue to like and subscribe to my channel. Continue to stay informed of the new videos that are going to be coming out regarding these topics and other topics right now that are happening in the market. And until the next video, I will talk to you soon. Take care.